Welcome to your chapter over group health insurance. With group health insurance, where you get it through an employer, some important things that you do need to know is that number one, the contract is between the insurer and the employer. The employer gets a master policy. Now, employees do not get a policy because they do not own the plan. What employees do get are certificates of insurance, and you definitely need to know that for your test that group participants get certificates of insurance. Evidence of insurability is usually not required as long as they do it during the open enrollment period. One thing that sets group different from individual is they underwrite the group as a whole. They do not do any individual underwriting. Cost of coverage based on the average age of the group and the ratio of men to women in the group. Now, group health insurance can be subject to what's called experience rating, where the premiums are determined by the experience of the group as a whole. The importance of that is it helps employers who have low claims experience get lower premiums. Now, with your group health, some terminology to be familiar with here, it could either be a contributory group or a non-contributory group. Contributory means that the employee pays part or even all of the premium for their group health insurance. If it is a contributory group, that means 75% participation must be from all employees. So 75% of all employees must participate. Or it is a non-contributory group, which means the employer is paying all of the premiums. If the employer paid all the premiums, 100% participation is required from all eligible employees. Types of eligible groups, there are employer-sponsored groups where eligible employees must meet certain time of service requirements or work full-time. Next is a multiple employer trust or a MET. This is where two or more employers who do not qualify for group health insurance on their own can get together to get group health insurance. Next is a multiple employer welfare association or a MIWA. It is very similar to a MET. It must be two or more employers. The only difference between a MIWA and a MET is that in a MIWA, they self-insure. Next is an association-sponsored group. Now, an association, a professional or other alumni association, to purchase group health insurance for its members, here's some rules. First, the association must have at least 100 members. At least 100 members. Please know that. Now, there's other rules. They have to have a constitution, bylaws, hold annual meetings. But I'm telling you on your test where they will try and trick you is the at least 100 members. Some of the underwriting criteria for group health insurance. Certificates are a guaranteed issue with no individual underwriting. Premiums are determined by the age, sex, and occupation of the group. The reasons for forming the group are other than for purchasing insurance. Certain participation level must be maintained. There must be a flow of new members into the group, and everyone is offered the same coverage. Some characteristics of group health. In groups of 50 or more, medical information cannot be required. There's an annual open enrollment period. If you want to join the group outside of open enrollment period, there will be a probationary period before you're eligible to get on the group plan. It's just for late enrollees. It does not have anything to do with pre-existing conditions. That's very important. It's just for late enrollees. Because of the Affordable Care Act, employers must offer group health coverage to anyone who is working over 30 hours per week. Under the coordination of benefits provision, in case both spouses are covered under each other's plans, like if I'm covered under my wife's and she's covered under mine, it does not mean both plans pay at the same time. What it means is that my plan is primary for me, If my benefits ever run out, hers will pick up as secondary or excess coverage, and vice versa. Now, if we have the kids covered under both plans, then it comes down to the birthday rule. Whichever parent's birthday is earlier in the year, not whoever's older, just whoever's birthday is earlier in the year is primary plan for the kids. Now, if my wife and I were born on the same day, then it comes down to the gender rule and men win. All that means is we have to pay. Now, if a group plan, if they're going to change insurance companies or do away with the coverage, any co-insurance and deductibles may be carried over from an old plan to a new plan. So you would not have to start all over if they change plans. On continuation of coverage, we have some federal legislation, which is the Consolidated Omnibus Budget Reconciliation Act of 1985, COBRA. Now there's a bunch of numbers in here in COBRA that you need to memorize. First, COBRA applies to employers with 20 or more employees to extend group health coverage to terminated employees and their families after a qualifying event. Qualifying events under COBRA are voluntary termination of employment for reasons other than gross misconduct, such as company downsizing, or employment status change from full-time to part-time. So those are the qualifying events for COBRA. For any of these qualifying events, the employee has 60 days to exercise their extension to COBRA. Then it must provide coverage for up to 18 months. Now, the maximum time period for COBRA is 36 months, but it is specific to death of the employee, then the family can stay on COBRA for up to 36 months. Divorce, the old ex can stay on COBRA for up to 36 months. Or in states that have legal separation, the legally separated spouse can stay on COBRA for up to 36 months. Now with COBRA, you stay on the group plan. The employer collects the premium. The employer can only charge an extra 2% to cover administrative cost over whatever the total premium was before in the group plan. So let me take a look at this. First, if you're the employee, let's say you're paying $250 a month for your group health insurance, pretty affordable. What you don't know is behind the scenes, your employer is paying $750 a month for a total of $1,000 a month. You have a qualifying event. You would like to get on COBRA. You get a letter from the insurance company that says, welcome to COBRA. Your new monthly premium is going to be $1,020 a month. And you're like, how did it go from $250 to $1,020? Well, remember, you're paying $250. The employer was paying $750. They're not going to pay that anymore. Add 2%. That's how you get to $1,020. Now, that is COBRA. That's going to be staying on the group plan. Now, there is also a conversion privilege, so that if you would like to convert from the group plan to an individual policy, you have 31 days to convert without proof of insurability to an individual policy. Now, you cannot be declined. However, the insurer can evaluate you so that if you do have any pre-existing conditions, two things could happen. Number one, you could get rated up, pay a lot more than you did in the group plan. And number two, you could get lesser benefits than what you had in the group. Next, we have a definition that you will need to know. The definition for small employer is going to be 2 to 50 employees. That is the definition you need to know. Pre-existing conditions can be excluded for up to 12 months or 18 months if you are a late enrollee, but then they have to be covered after that time. The Health Insurance Portability and Accountability Act, HIPAA, a lot of us know about the privacy part of HIPAA, and it protects our information and however that might be transmitted. Also, though, for HIPAA, for group plans, it prohibits discrimination against employees and dependents based on their health, and it allows individuals an opportunity to enroll in a new plan in special circumstances. Now, for individual plans, it guarantees access to individual plans, and it guarantees renewability of an individual plan. All right, so that is your chapter over group health insurance, and we will see you on the next video.